If the market's up, it's got to be a bubble, just like 2008. Oh my gosh, abandon hope, all ye who enter stocks. Or perhaps, maybe it's just a bullish market. Lee Munson's here to discuss. Lee, what's the mood out there? What do you take to be the collective mojo of investors?
Oh my God! I've been in a couple industry conferences in the past 3 months, and the average age of people in my business, like 55 and up, and they all have the same thing. They all go around talking to each other, and their investors reflect this: when will the market go down, Lee, so that I can get in? And here's the funny thing, Jeff: it's not about skepticism about is this a bubble or should the market come up? I mean, everybody thinks treasuries are in a bubble, but that's last year's news. But the issue is that they do believe in the market. They just want to have this opportunity where somebody else panics and sells their stock, and then it allows them to go use their cash that they blew out because the fiscal cliff is going to kill you, and they can get that to work. So it's really, to me, kind of sad, all these people running around with tons of cash. I get people every day, individual investors come in, and they've just got 40, 50% in cash, and I'm like, what's going on? This is a mass national problem right now.
And what is that issue, though? Because you can get into a lot of different traps. If you've talked yourself out of buying stocks for the last 100% up, you're really stuck in a rut because you think the sky is going to fall, and you keep telling yourself that to confirm the idea that you're smart and the sky is, in fact, going to fall. How do you get people over the hump to actually believe in this market? Because I can sit here and shout a million different reasons that it shouldn't be going higher all day. How do you trample that down and buy?
Well, you just tell people, like, okay, what are the 3 things that are going to end the bull market, folks? Okay, number 1, we've got to have the Fed start tightening rates and start tightening aggressively. That doesn't seem to be happening, especially when you've got people from last week talking about, well, we might take a little bit off the $85 billion a month that we're printing. Number 2, you've got to have an overvalued market. We're not even at a 15 times earnings right now. I mean, if we're at sort of a historically higher valuation, maybe the S&P 15, we'd be at 1675 on the S&P. We're not even close. The other thing that we have to have, other than irrational exuberance, which the only irrational exuberance is people wanting to dip to get in, is that you have to have an inverted yield curve, okay? With long rates going up, because the game's over on long-dated treasuries and almost over on high-quality AAA corporates, we're not going to get an inverted yield curve anytime. So I think that it's not about how great the market is. It's about what is going to make it stop. And right now, we don't have a single thing that's really going to stop it right now. And don't tell me, oh, but in a few months we're going to sequester. Please, old stale thesis, not going to happen.
What would be the fly in the ointment? If you could pick anything, any single thing that would make you a little more cautious, what would it be?
Well, I think that let's take a rational and balanced approach. Profit growth is pretty good right now, but if you wanted for me to give you a reason why you should be very concerned, we do have more taxes this year, and what has been buoying up the market and overall spending is that consumer spending hasn't gone down. So consumer spending continues to be there, and your downside risk is that's going to taper off if people don't lower their savings rate. So classically, in America, what happens is that taxes will go up, but if the market goes up at the same time, investors simply adjust their savings rate, means they save less because they just saw their 401k made 4 or 5% last month in January, and then they continue spending, because that's what Americans do. We like to buy crap. Yeah. And so that's what could happen is if we don't adjust our savings, we continue to save as much, get taxed more, and end up saving less, we could have some problems in the summer. I don't think it's going to happen, but it's something that I have planned B in the back of my mind for my clients, my investors.
All right. Well, Lee Munson's bullish unless Americans stop buying crap. And there's a pretty slim chance of that actually happening anytime in our lifetimes. Start getting into stocks, folks. It's just not that bad. Why don't you comment down below, drop us a tweet, or just email Lee Munson directly.